All right, happy Friday. Welcome into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thanks for tuning in. If you're just tuning in, we've got lots to talk about again today. These markets are all over the place, so stay with us. Pull up a chair, nice hot cup of coffee, and let's get after it. All right, let's take a look at what's going on in these markets. How about the corn? These markets are your money. Let's stop talking and get to the prices. How about March up 5 1/4 cents? 630.5 is last. May's up 5 1/4 cents at 628 1/4. Now, corn has just been slowly but surely pretty steadily strong here over the last week and a bit. So good to see that. How about soybeans? Soybeans also double-digit gains here. 19.5 cents higher in that March contract, 14.67 3/4. May up 19.5 cents as well to 14.73.5. So we have been higher, but we'll take that, right? All right, Chicago wheat. What's going on there? March up 11 1/4 cents, 7.88 1/4. May up 10.5 cents, 7.92 3/4. So far, so good for a Friday. I know I'll get in trouble for rooting these markets on, but hey, I grew up a producer. Can't get it out of my blood system. All right, March up 11.5 cents, 8.05. Even is last. That's about 4 or 5 cents off the highs there. May up 11 1/4 cents in this hard red wheat in Kansas City at 8.08 1/4. So Kansas City and Chicago doing very well. Let's see about Minneapolis and the spring wheat there. 18.5 cents higher in that March contract. Look at this. Making another run, 18 cents higher in the May. So March is last at 9.21. We've got May last at 9.18. And then lastly, let's take a quick peek at cotton. What's going on in that market? Cotton is up another 170 points. Look at this, 123.33. We're just off the highs by about 17 points. So we'll keep an eye on that one for you too. All right, let's bring in Joe Lardy. He's in balmy Minnesota. He's with CHS. Joe, any of these prices warm your heart?
Well, like you said, seeing these markets all higher certainly kind of improves the mood and sentiment of a lot of the customer base, so that's generally a good thing. And a lot of times when we see a higher priced environment and more volatility, it just leads to better overall market conditions, and is probably better for our markets. It's probably way better seeing that than having, $3 corn.
The only thing, I was a broker for a long time, so was my father. And we used to say, we always wanted the corn market to be at $3 or $4 as a broker, just because that meant that we had just so many bushels out there, right? And they had to go through something, and a lot of times we were doing business for commercials, and so that was pretty good. But as a broker, if we get up to say, if corn gets up to $10 a bushel, that might mean we only have 2 bushels out there to trade. You know what I mean? Is volume tailing off the higher we go? I guess is a long way to ask that question.
The funny thing is a lot of times when we get into these markets that get really choppy and we have these big gapping days, it's because there's not a lot of liquidity in the market and there's more air pockets. The market just moves a lot. But I've been tracking volume here, and we had really good volume days. The activity is robust. These markets are alive and healthy, and I think there's just so much going on. We could talk endlessly about all the different market factors that there's something to trade nowadays.
Well, that's good news, because again, like I said, I grew up a producer. We always wanted prices as high as possible. But when it comes to transactions, sometimes you see more of them at lower prices than you would at higher prices. And now that you've told me that you're seeing some decent level of volume at these higher prices, that means it's more for real, right? It doesn't mean it's just a one-shot deal. So that's good to hear. All right, thank you very much, Joe. That's Joe Lardy from CHS. He's coming to us from Minnesota, the warm Minnesota. We're going to go away, pay some bills, and come back and talk livestock with me after these messages.